Hello traders, welcome to your market update for Tuesday the 17th of March 2015, and we've seen overnight a relatively quiet night. However, US dollar profit taking was the theme as the market started to consider the possibility that the Fed or the FMOC minutes will leave the key word that we've all been focusing on, patience, in the document, and this will lead to some more US dollar profit taking should that be the case, as it would mean that they're going to leave the rates as they are for now. They did say in previous meetings that when they do remove that, it is an indication that they are considering to raise rates in the near future. So that's the key word that everyone will be focusing on, and people are starting to get a little nervous, and for the reasons I mentioned in yesterday's video. We also had the RBA minutes came out, and it was quite interesting, and there's been some key words that came out of that, and it's the economy is operating at spare capacity for some time. They also maintained an above fundamental valuation for the Australian dollar. They also see that there's risks in the commercial property and also in the housing market, which we've all spoken about in previous statements. They also see that there's going to be a lower growth in the economy. They also see that the economy seeing benefits and view that the best case for easing policy may emerge. So they may be looking to cut rates in the future. So I'm not too sure on when that will be. The market, they didn't give any indication, but overall it was a negative policy, and the members did see benefit in allowing some time for the February rate cut to filter through the economy. So we could be getting a rate cut in the near future is basically the overall outcome. The Australian dollar did take a little bit of a hit on that, and it does create a divergence between the Australian dollar and the currencies. I'll get back into that in the technicals because I do have a trade on around that nature. So tonight coming up, we do have a little bit of data that the market will be focusing on, and we will see some consumer price index coming from the Eurozone, but also this German economic sentiment will come out. Now, it's expected to come out with an upbeat surprise, and the euro could actually continue its bounce. Now, the bounce last night came from Draghi's statement and speech, where he basically mentioned that they weren't buying the $60 billion of bonds last month that they indicated. So there was concern that there isn't that number or that quantity of bonds out there for them to be buying, which would be positive for the euro, as it's the liquidity would not have been there. So that's why the euro had a little bit of a bounce. And he also noted once again that the economic situation can see signs of slight improvement. Not saying that it's good, but just saying that that there was improvement there. So that was quite positive as well for the euro. So that's what created the bounce, and then also led people to take profit on their US dollar. The US dollar also took a hit later in the US session, as we did have a little bit of weak data come out. Nothing too major, but it is starting to get people thinking about whether the Fed is really going to need to raise rates anytime soon. And as I said yesterday, I don't believe that there's a case for them to be pushed to do it, but we'll have to wait and see what their path is moving forward of actually executing that plan. So tonight we have a little bit of data. We'll keep an eye on that. And moving into tomorrow, we don't have a lot until we get into the European session, and I'll talk more on the Bank of England's minutes there, and we will get into Wednesday tomorrow. So let me go over to the daily US dollar chart, and as you can see there, we did have a bit of a consolidation, slight pullback, nothing major. The stochastics has dropped below and grinding lower, but the price isn't really following momentum, and that could just mean that we are having a pause here, and momentum could start to build, and we could see the next move higher. But once again, that will come down to the Fed statement, and that will ultimately control the US dollar for the remainder of the week. So between now and then, it will be the market speculating, and then after the statement, it will be the market pricing in its forecast for the future. All right, so let's get over to some charts, and we'll have a look at the New Zealand dollar. And as we can see, we had Friday's pullback, and yesterday we had a bounce. That wasn't based on anything other than the market remembering what happened with the RBNZ talking about leaving rates on hold and also taking profit on the New Zealand dollar. So therefore it was not a bad little move. And we're seeing now that we still haven't taken out the highs, the previous resistance. We have made a higher swing low and we have made a lower swing. So it's a bit of a consolidation pattern, nothing to get too excited about. The Australian dollar had a much smaller rally, and then that was taken out once we seen the RBA come out today and basically say those negative comments on the Australian economy. However, the market is still taking some profit on the US dollar index, so therefore the move was capped above 76 cents, but we'll have to wait and see what happens into the future. I think that there is still a big negative divergence between the Australian economy and New Zealand economy. I still have my trade on. Entry was up in here. Stop loss was up in here. I've now moved it to my entry and I'm up 120 pips or so. And I'm looking for the divergence to push the Australian versus the New Zealand lower in the coming weeks and months, as the New Zealand is very clearly indicated they're going to keep rates on hold, and the Australian RBA is saying that they could possibly look to cut in the future. So that's only going to increase the divergence between the two economies and potentially send the Australian dollar down to test parity, which is $1 at some point. Now, the Great British Pound had a bit of a bounce. Now, the bounce could be a dead cat bounce in that I spoke about yesterday, the market has broke the massive level of $1.50. A lot of damage is being done, and we will not see the market, I don't think, get above this $1.50 at least until we start to see tomorrow's comments from the Bank of England. And if they have something very positive to say about interest rates and the future of them raising them, well, then we will see it break above $1.50, I think, and then this will be a short-lived move below. However, in my realistic opinion, I don't think that they're going to mention anything about raising rates in the very near future, and we could see resistance form here and the next move to continue lower. Like I said, the damage has been done, and there's a lot of significant support that has been broken, and it's a big move south. Momentum's definitely against the pound right now, and it's going to be hard on a technical basis to justify a big move higher unless the BOE really sends out a positive tone to the market and also indicates a rate rise in the near future. The euro also had a bounce, and I mentioned that was just due to a couple of factors. It did stall at $1.06, and as you can see, it's trading back below, so it still has a negative pattern to it. We took out the lows, and we've still got a lower swing high. So the moves for me are still in a consolidation move. The US dollar coming up will be the dictator of that, but the bounce was just purely on the back of a little bit of positive banter or chat from Draghi, and also the lack of bonds that were bought, and also oil falling to some more multi-year lows. So we'll have to wait and see what happens there. But for now, it is in a consolidation, and I think the FMOC minutes will push around the currency pairs later in the week. If we have a look at the CAD, it is just purely reflecting the little bit of pull-off on the daily chart. I'll go to the 4-hourly. That happened just purely due to the market speculating that the FMOC minutes will keep the rates. As you can see, we just pulled back and then we're just really gone nowhere, and there's not a lot to get excited about. But the overall trend is up, and the US dollar strength, I think, could come into play, especially if the FMOC minutes say that we're still on track to, at some point, raise rates. That still puts their economy well ahead of any other, and the price action should reflect this. So for now, I'm definitely not looking bearish. I'm definitely not worried about the US CAD falling apart. There's no economic data to generate that, and it's a very similar story with the US versus the JAP. As you can see, it's gone nowhere for a couple of trading sessions. The market really is waiting for the FMOC minutes with this pair. And I think for myself, I'll be looking for a trading of the breakout to the high, the major high and the major low. And we'll just be drifting around in here for some time. For those that are scalpers, you may be able to pick up some pips as the US dollar index just floats around in this period and starts speculating on what the FMOC minutes has to say. So that's it for me today. Good luck trading. There's not a lot going on as the market starts to prepare itself for the FMOC minutes. Tomorrow before we have the FMOC minutes, we do have the Bank of England statement, and that may also create a little bit of volatility in the European session. So things start to heat up tomorrow. Stay patient, keep the money in the bank, and we'll definitely find some opportunities to make some money later in the week. And until then, trade well.